Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hello, welcome back to the Investing Podcast put on by Tusk Media. We have presences on Seeking Alpha, Twitter, Facebook, so catch us everywhere. We also have iTunes podcast that you can download and listen to. Today we're talking about Nike. I was originally going to be doing this podcast with Andrew Hall, Vice President, but unfortunately he's down with a 103.3 fever. It was interesting, I was coming in today and it was incredibly cold. It really just got a big cold front here through Atlanta. Had to scrape off frost from the window and everything, but you know what isn't hot? What isn't cold is Nike stock and their earnings, which reported a really solid beat last night. Not to toot our own horn, but we had said there is a good chance that they will surprise to the upside in our preview. So go through the numbers really quick. The headlines: EPS 50 cents versus an estimate of 43 cents. Revenue was $8.18 billion versus an estimate of $8.09 billion. Gross margin slightly missed expectations, but they posted 44.2%. Estimate was 44.3%. So a lot to like from the headlines, and in fact, right after the press release, you really got that follow-on buying, and the stock traded up about to 5% up. Everyone was kind of looking forward to putting these threats of Adidas and Under Armour competition behind them, and saying futures orders don't really matter as much as they used to, because the correlation between futures orders and revenue has deteriorated so much. Moreover, the direct-to-consumer business is becoming a larger and larger piece of the pie, so you're seeing just less wholesale order growth from that. We actually saw it this morning. Finish Line reported earnings, which were just a total gong show. The stock went down 15%. So you are seeing a change between how Nike reacts and how Finish Line reacts, and how some of these wholesale retail partners react to the consumer environment. And then when you got onto the call started at 5 p.m. Eastern time. And the call was extremely bullish. They're talking about, very flowing rhetoric, saying, like the world's best marathoners, the results that we post always reflect moments where we have pushed the pace and moments where we took stock of the circumstances and made adjustments, referencing some of the adjustments that they made to their basketball line last year. And now they're saying that the basketball line is the healthiest it's ever been in 18 months. For example, they're seeing incredible momentum in basketball. Basketball business is much healthier today than it's ever been over the last 18 months, and the energy continues with the Kyrie 3 and the LeBron 14, generating off-the-chart anticipation. They talk about their tremendous manufacturing revolution improvements and the investments they're making there, saying that they're enabling to bring product creation closer to the consumer while also enhancing labor productivity and reducing materials waste. Potentially, from that point, that you would think that would be margin accretive as they execute to that plan. And then they say, their main priority is always growing the overall market, and that market share will move back and forth, but what their view is that if they can grow the market large enough, then they're in a prime position to capitalize on that. So they say, our primary focus has always been on growing the overall market, creating greater capacity for the Nike brand over the long term. And today we see the potential to increasingly leverage digital to more personally and fully serve customers, unlocking new growth and productivity within and well beyond the four walls of a retail store. So again, very flowing rhetoric. They spent over about 10% more words on their prepared comments this quarter than the previous quarter. They're really talking about the potential for that momentum in their business to accelerate over the back half of the year, because of course, fiscal quarter 2 ended in November. So we're already in the back half of the year for Nike. So they spent 45 minutes doing this, and stocks do it performing extremely well at this time. We're at about 5:45 in the evening, and then they come out with their guidance. And their guidance is very weak for the next quarter. Guidance is mid-single digits. Market was looking for about up 8%. Gross margin especially was weak, talking down again about 100 basis points. And the market was looking for down 14. You can't go through 45 minutes of a call and then come out and say, we're doing all this great stuff and our next quarter is not going to be very good. Now, in fairness, they did say that the full year is still on track, which implies a very strong fourth quarter. If you look at a chart of the revenue growth, for instance, you'll see that if they post a mid-single digit comp this quarter but are still looking for high single digits for the full year, they're going to have to post a high single digits comp in the fourth quarter, which would be one of the highest comps they've posted in quite some time. So if you're looking out there, but then you got to get to the question of, do you actually trust management that management is going to be able to deliver this type of revenue growth in the fourth quarter? A lot of people are pointing to futures orders as the reason the stock came back, but I think it's more the guidance itself. I don't think futures orders matter as much as they used to. If the stock had declined on futures orders, I would have said that was wrong. The guidance was weak. That's what you got to look at. Futures orders mean less than they did, a year ago, especially 2 years ago. So again, futures orders are weak pretty much across every geography, as you can see in that chart. So the path forward for Nike. If you're a long-term investor, you want to look at more of the qualitative aspects of this call and then evaluate, now, do I trust management or not? So it's a kind of a two-tiered system. Was the call bullish? Was the call bearish? Then, if the call was bullish, do I trust management? Do I distrust management? So you got to answer both those questions if you want to be in the stock for the long haul. For the near term, you're kind of looking for that catalyst. Expectations are now going to be quite high for the fourth quarter, implicitly. So, do you have a view that they're going to beat in the third quarter? If you do, that's a variant view, and you could make an investment case out of that. But you got to look for that. You got to look for that variant view in order to find that variant return. For me personally, I was pleased with the quarter's results. I was disappointed with how they managed the call. I think if you're going to post weak guidance like that, you gotta explain a little bit more around it and leading into it. You can't say we're a fantastic company and then post a below estimate guide. You just can't do that. So I was disappointed by that. I still think it's a buy in the low 50s. I don't think that a ton has changed. That has dropped the stock from 67 down to where it is today. I think you have seen more competition. I think that 67 was probably a little elevated before. But in the low 50s, I think you're buying at Nike at a solid growth company. I still view it as a solid growth company at a fairly reasonable price in a market where consumer discretionary stocks may be starting to accelerate to the upside if this Trump phenomenon and what we've seen, the reaction in the markets, continues to hold sway. So keep an eye on that. This has been the Investing Podcast. Tweet us with questions at Tusk Media LLC. And I look forward to hearing from you. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.